Okay, everyone, so welcome back. Today is the 10th of June. 10th of June, it's Wednesday. So I'm going to be looking at a couple of charts. Okay, so first let's go look at, probably today we'll look at the dollar yen. Today we focus on some of the yen pairs. Let me see. Okay, let's go look at the yen pairs. Let's just see what's going on. Okay, this was very nice. See those traders who fade the breakout. There was a previous high here. So if you book the previous stop and then you just enter because believe the book this previous stop and it's going to go well. Smart traders will fade the breakout, even close above, right? Close above this previous resistance, I call it that. But not so easy, right? It doesn't just close and then it just go. So there needs to be confirmation. So if anyone this is done to, fading this resistance over here means it goes up and then but instead of continuing strong, it just fades. Like, the strength has disappeared, so it collapsed back down. So those traders who are smart money, they were able to capitalize on that. So now we are on this side, right? So all these were potential points for it to bounce. So people who faded it came back here. This is all like bounce money. This one up and one down. So around here, I can see people taking the trade off. So where to now? Dollar yen, I would say after a strong move like that, this move was always possible. Like this move, always possible, right? Like this move is always there. It's always possible. It's always possible. Will this go down, break this previous low? Maybe not. Like just make a bigger sideways before, and then after that slowly maybe it starts to go back up again. So the upside, so basically the idea is you're just trading within a correction. And remember, before any big move comes to break either this high or this low, this high or this low, market needs to put as many people on the wrong side as possible. So right now we're trading within this credit structure over here. So what I would like to see is actually something like this, something easy like this. Something difficult would be this one, looking like that, and then it crawls, it goes to break this high. Well, that would not be something very pleasant, but can exist. And then this will start to look like this. Right? Then from here, a lot of things can happen. Then we have to see what happens again. If it starts to be really slow, then you must always believe this could be all. Then what if this is 1, 2, 3 like this, and then this? It's just a slow crawl to the upside. All possible. So we don't want to see that's too far. That's too far ahead. So the immediate move right now, the easy one. Let's talk about the easy trade. Would be this one coming down real slow. This is what you want to see. You want to make money on the easy stuff, right? So you want the downside. Downside. That would be the easy stuff. What else? It's also possible if let's say on a very low time frame, if this one was to be this way, if this one goes up, comes down like this, and then if you see any small buy, you could also take it to the upside because this is always possible, unfortunately. All right, once it hits this, best to take profit because again, you never know if that's going to happen. So you just take from zone to zone. You see, if you see from here to here, you can take. You take from here to there. Here to here, you can take. You take from here to there. So it depends on what it gives us. So right now, this looks interesting. There must always be some pullback. You see, after the strong move, there's always some pullback here. There's always some pullback over here. So this pullback here is what you gotta be very careful of, and then you hit this important zone as well. Okay. And if you want to, you may even come here, break this low. And then again, people who thought this was here, then they try to continue down. Well, then when it pulls back, then they get caught as well. right? So always strong move always has, usually is accompanied by some sideways. See, strong move, some sideways, right? This is strong move, some sideways. So that's what you look out for, right? So that's the dollar yen. But ultimately, again, the bias for this is a daily chart, right? Feels down for this immediate move you see right here. Okay, let's look at the funky stuff, the dollar Swiss. Well, before we look at dollar Swiss, let's take a look at the dollar yen. So this dollar yen was mentioned last, besides the charts that were on trading view, we also talk about this on YouTube, where we were looking for the dollar yen, the Aussie yen buy. So I mentioned it on YouTube, but basically I have this chart here. So these were the preliminary labels I did for myself. So 1, 2, 3 down, and then this is a possible first, second, followed by another third wave. This one needs to change. All right, this one needs to change. This one actually I need to move it to the right side. But basically, at this point in time, like last week, you're looking for the Aussie yen strength here. Right? So naturally, it went up for this A wave, and basically now we hit this top here. So remember when once it hits some previous support, in this case some previous resistance, never ever just buy because it breaks and you close above, right? Never to do that, because traders often fade such kind of breakouts and then collapses this way. All right, there's a lot of liquidity here, so don't be faked out by such by such things, right? If you wanted to take this to the upside, when I was here, take this upside, that's okay. Once it gets there, it's best not to stay in it. Just trade from, you know what I say, trade from here to here, let's go. Take some money and go. Trade from here to here, take some money and go. Don't it's best not to like enter somewhere in the middle and then just aim for, like, you know, A, B, C, and then you think that this C here is somewhere here, and then this is just gonna go all the way up there. Because often price, in order to get from here to here, need some sideways. Right? That's important. Right? So yeah. So now here we are in Aussie yen. So Aussie yen, this was the very top. So Aussie yen, we're going to talk about dollar Swiss next, right? But let me just finish up this Aussie yen. So what to expect? What I would like to see actually is this a fade out, right? It's some kind of bull trap, some kind of downside is what you're looking for. You're looking for all this downside. It's what I want. Even if it's somewhere up to here, I'm going to trade it day by day, a little bit to the downside. But ultimately there might be one big pullback. Something big like this one can happen. So when this one goes up like that, but ultimately something is going to happen. So you entered here, you didn't exit there because you thought that this was going to go from here to there. Guess what? When this happens, you get back. If you're up 3,000, you get back more. You get back a huge chunk of the profit. All right. So I always trade zone, here take some, here take some, here take some. Don't always take some, because after a strong move, as a swing trader, you know that after a strong move comes some kind of sideways to that's going to try to collect back all the profits. Yeah, strong move, and then something that, you know, if you entered somewhere here, you actually get back almost the entire profit, right? Okay, just 1 second. Okay, sorry about that. Yeah, came back early today. Okay, so as I was saying, if you're looking for a move down, like in this case, you're looking for some kind of sideways and then next move down. So when that's the next move down, you always remember at some point this big stuff can happen. At some point, some big stuff can happen, right? So see, then a big stuff can happen. So this big stuff can happen. Big stuff can happen at any point. So just take and go. That's what I'm looking for. So first we took Aussie yen up, and now you're looking for Aussie yen back down. There's no real, in terms of the bias, when it was here, then naturally it's uptrend, so you're looking for the bias to the upside. But once you hit this point, if we continue taking the buy, at any point we have to exit, because we're hitting some very important zone over here. And then once it spins, if it's let's say any trade on the wrong side, you're gonna be stop out quick. So just exit quick and not keep the loss for too long. Very important. Right. Okay. Just 1 second. Okay. Good. All right. So you want this thing here to actually come down. This amount is actually quite a good amount. If you could come down about 75 to 74, yeah, about 100, about 75 to 74, that would be good, right? Okay. Okay, right. So that would be the Aussie yen. Let's go look at something very peculiar. Let's go look at the dollar Swiss, the funky stuff, right? So you see again, this kind of very dangerous fade outs, right? You see, just because there was a previous high, you see, it went down, it went up, and then after it swung down low, it came back up. But then if you just, broke the previous top, the previous price where price pushed down, and then immediately, when it looks strong, but then next minute you get a pullback immediately. So be very careful of this kind of fade out, right? Very careful. It does not mean that it can't continue to go, but in order for it to continue to go from there, of course, right? Of course, what you need is something to confirm it. Some structure sideways here that says, hey, you know what, it's staying here, and then it breaks out. It means it's going to the upside. Because if you don't have that, it's dangerous to trade it. Right. So what we have now is you have something like this. Something sideways. A strong push up and a sideways. Well, if you move up and then sideways like that, you naturally do like the upside. Let's see, do we want dollar strength? Yeah, so naturally what you're looking for is the dollar strength. Something like this. If we could get this dollar strength to go something like this here, real slow, and then suddenly you see some strength happen, and then something slow. Oh, this is all very good buys. Then you should look for the upside. And at least you're looking for the top to break and not the bottom. So you want, this is under this kind of conditions, this slam kind of slow crawls the upside is what you like, basically. You see all this here? See here? If you look over here, you see all this stuff that slowly go up. You see all this stuff like over here. This is all good stuff for the upside. Right? So I would just set in. So even though right now it looks like it's going down, but I'm not so keen on the down. I'm not so keen on this move down. I'm actually quite keen on something like this one. It slowly goes up, and all this will make for very good. So naturally, again, you don't just, I think the bias is up. A, B, C, right? These are only amateurs do this, right? Fibonacci here, take bounce and go. No. You never do that, right? Don't you take bounces? You know that it's not the right way to trade, right? You heard it here. Don't trade that way. It's not good. Stop for swing trading anyway, not for swing trading. But if you take bounces off structures, that would kind of make sense. Okay, so something like this one, if you know that trading the fades are a good idea, fading the breakout, like it kind of breaks out, and then everybody just buy because you go up, then come back here. All the bulls would suffer, and as people slowly get stopped out, you see it's so sharp. And if the bulls here endure this, now they're in trouble again. So if you want to take bounce like that, it kind of makes sense, okay? Because then you know where your stop loss is as well. It's an easy place to see where stop loss should be. Now, if you look at this one over here, you see that? So it came here, but when it went up, some sideways, there was some sideways over here, and then at least this one, when it broke, it went, you see? So you need some kind of structure that determines that this is going to continue to go, right? Otherwise, it's better to just hit some previous stop, just trade the fade out. It's actually a good idea. It's one kind of bounce that you can potentially not lose too much money on. right? Right, next. Dollar Swiss, that's not. CAD yen. Okay, so CAD yen. CAD yen, see all this RSI, it look like it's at the top already. You see all this stuff like things like that. So even if it wants to go up, any pullback to the downside is all very, very possible. So some move back down to 382 around this level, all possible. All possible. So look for downside, right downside. Now, I'm not saying this. Notice I'm not saying that because there's no guarantee that that's going to happen, right? So don't come like impulse question. If it did this, it did that, it did this, it did that, and then something with a lot more sideways, all this, that's very good for downside. That means it's making strong push and then the sideways strong push. So making lower lows and the entire context looks down. You see the entire context looks to the downside. Then all this is really, really good, right? So you want to see more of this. So unless that has developed, saying that this is going to go here like an A, B, C, 1, 2, 3, it's a little bit premature, right? It's a little premature. So you enter here, hoping to get out there. Well, you should know that all this will come and try to disturb the trade, right? So know how to handle the intraday. Let's go look at something that I don't trade, but it seems to be of interest. Okay, see, let's go look at this one, CAD Swiss. Let's see if that's there. Real slow crawl, really slow crawl. Yeah. Strong move down with a really slow crawl. Okay. So you see, very, very dangerous when you break previous lows like that. So you just fade, break out to the downside. You're supposed to go down, break the low, but went straight up. So see all these lows here? You broke the previous low and then upside, right? Especially daily structures, these levels tend to hold. Okay, let's I don't want to say this. It's too premature. I don't want to say that. It's too premature. It's amateurish. So let's go look more at. Just move that away. It seems to be. See, it seems to be placed. You can still play the upside. You see, but before it plays the upside, it may actually come down before it goes up again. Let me see if there's any such opportunity. Let's go forward. I want to see anything on forward. Okay, then let's go. If I go for, I see some. What's the push right here? And then, yeah. So over here, it's where it broke this low, right? So you're gonna be careful that. So what this could do is it could come down lower. You remember it comes here. If you say that's gonna happen, not really true. If it comes here, it corrects it. It breaks a little bit more. It could come like this. When it goes up, it could come down one more down somewhere, maybe to some previous push, something like that, or even up to here. This is possible. I would trade it to there, but from here it gets shaky. You see, these are all these moves are all tied together. In the best case scenario is this one comes up right to this bottom over here. But knowing Forex, right, never so simple. Even a move back up like that is also possible before it comes down. So I would never trade here and then hope for it to break the low. Never. So you got to trade from zone to zone. If I enter here and when I exit there, that's something I would do. So basically, I would be very interested in small moves like here, from here to here. And don't forget, this would be a 1 hour time frame. Yeah, it's about, how much should that be? 50 pips. This one, if you know how to intraday trade, this kind of moves, 50 pips. Yeah. If it pulls back up higher until here, even better. So it comes down here, but then don't keep it because then there might be a bigger pullback. When bigger pullback, even better. Then you're going for the bigger move again. Okay. Right. Let's catch Swiss. We already spoke about Aussie yen. Let's go look at let's go look at oil, right? Let's go look at oil. So oil. So again, remember when the lows, this is a daily chart, yeah? So this is a daily chart, okay? Look here, daily chart, right? Very important. So characteristics of, so if, remember, breaks the low, what happens? People fade the break to the low and instead pump, and then pump, right? So here, same thing again. If you didn't learn the lesson here, then come here, if it breaks and close below, you thought it's gonna go even lower, well, so that happened again, right? So remember that. Don't always follow the trend. Market makers make money from people who are not able to discern what is the right time to enter a trend, okay, or to fade a breakout. So everything has a place. Now this one has gone up there. So what you're looking for? More upside. More upside. Naturally, I think people who are stuck here want it to come back. We may never come back. You see, it never really comes back. Never really comes back to the low. So no matter what happens, there will be some kind of loss, right? It's just about how much you lose if you were looking for the trend to continue. So right now, what you're looking for is more like this. See, it's all that's what it happens. See all this here. So all this sideways all this sideways. There's always some kind of sideways to go and take out. See all this sideways here. So you see anything like this sideways, you guess what? You can see it there. You can see it there. You know how to trade this. You're looking for that. Basically. I mean, oil. How low can oil go? To be honest, unless the only person that can kill off oil would be someone like Elon Musk, right? All cars converted to electric power and it's charged by the sun. Before that happens, I mean, the world still needs oil. So yeah, Sherman, you should have done quite well if you had followed this. If you had looked at this position here, you should have done very, very well. Right, very well. It comes along once a long time. Just look at the time factor between here to here, and the time factor between here to here. Right? It comes along once in a while. Once in a long while, anybody who happens to see it can make 10, 20, 30, 40K just buying at the very low. Okay? It's no brainer. But just that it's a large time factor involved. Right? So next, let's go look at gold. Let's go look at a bit of silver as well. So silver still not high enough. Still needs to get to my level over here. I had one chart that needed silver to get up to, let's say GUSD. Do I have it? Oh yeah, I have one chart here, you see. So I needed silver to get higher. Still not high enough. See, it's still not high enough. So this was the low. So I need for you to get up to here, 26. Come on, man. I need to buy a condo. So it's taking too long, but I know for a fact that this might do that. Who cares? Okay, so still need to get up higher. Not doing well. Not high enough. Need to get higher. Okay, so what to expect now? Now is at this important places. Again, if this one breaks the upside, even though I have a forecast that's so up, that's like 26, right? Yes, but I'm saying now that when it gets up there, does that mean that this will go? Remember what I said? Often when you come to this high, you can fade out and come back here. You can do stuff like that. Then this is the one that goes, not this one. Okay? Not this one. Not this one. This one, unless he has some confirmation, some small sideways that says that he can go, something like this. See all this? He says that he can go, then he can go. If he doesn't have any of that, he's going to pull back. All right. So even though I know this is where you ultimately go, but how it gets there is a different thing altogether. There must be a time packet swing somewhere here. All right. So don't hop in at this very top to buy here and get there. That's not right. All right. Next. Okay. So that's done. Silver, easy stuff. Gold. We should go look at SnP also. Our friend is very involved in SnP. So I look at Go SnP and then that's it. Gotta go play some Wild Classic. Okay. Gold. So gold ultimately finally reached these levels over here. Yeah. So what to expect? Still pretty strong. Still pretty strong. This is also pretty strong. So you don't expect this to continue that much further. I would say that this one, this is you cannot ignore this strong push down. Somebody tried to fight. The best tried to get down there. You know, they tried their best. They're like, get down, but then the bull said, nope, sorry, up again. So therefore, I'm inclined to say gold still looks bullish. Now, how it continues up is going to be the interesting thing. How this continues up is going to be interesting, but always remember stuff like that, you could get something like this. And then this is all still, if you see this, it's still all upside. So stuff like that. So this would be like that. Same, and then after that, this one just crawls up. And then breaks to the upside. See, it just breaks. All these little breaks to the upside, breaks to the upside. Okay. So then this was a bigger one. Now, of course, this can be a bigger one, but it didn't come into the upside. So you ask me, be very wary of a move down, because even if you bought here, it will be wrong. Because why? Then you go into this drawdown here. So a buy from here would be perfect. Then your stop loss is lower. Your stop loss will be lower around here, right? So you need to know how much to measure your stop loss. Right? If you don't want this kind of stop loss, then of course you are taking the breakouts to the upside. That's intraday trading. Okay. So, but in terms of the bias, what you want to see is you want to see stuff like this. You want to see a strong push down, and then you want to take the buy. Because even if the buy goes up like this, or whether it goes up like this took a long time. This made you 10,000 fast. No, sorry, this made you 10,000 fast. This made you 8,000, not that fast, but still, it was still up. All right. So the bias is up, whether it is a corrective structure up for the next move down, or whether it's a strong push up, everything is up. The bias is still up, right? And always be careful. Always remember this thing. What we spoke about, that even if price comes here and breaks this, and then you just sell here because you think it's going to get there, what's going to happen? Yeah, experienced traders will fade this back in. So you got to be very careful. So anytime it comes back to low, it's good to look for the buys, and you must know how to intraday trade this upside. Remember that. Okay? If you just simply take the bounce, you need to know what you're doing, right? So I like the upside for gold. What else? I think my last one, SnP. Yeah, supposed to talk about that. So this is what we spoke about with an old friend of mine. So I spoke about 325, but this coming up to 3250. Reason for that is because, as you can see, it's all up here, right? See that? So this level is where you're going to encounter stuff. There's liquidity right here. You see here? So, but to say this was a strong move, strong, right? To say that this is a strong move, remember? We're not about that. We're not about that. 4-hour daily charts, you cannot really, you hope for that, but intraday trading this down, you cannot just aim for that, yeah? Don't just aim for that. So when you hit this level, could this also just crawl up here? Can this be that too? Yeah, of course. So if this broke the previous stop, any sells here, will be under pressure there. So you don't want to sell here. If you sell here and you know what kind of stop you have, that's fine, right? You need a big stop because there's no telling where this is going to crawl, right? If you're looking for just a quick move to the downside, that would have been correct. Because at this zone, you would have, if you had just looked for this move, and you know strong moves does not always mean a continuation down. So when it came here, you said, okay, it's going to come down, but then it's going to go sideways. And then it did this, and then it did a sideways. You see? So don't sell. One thing you must never do is you sell, because this is almost like picking a top here. You just simply, this is like another top, you just sell, you try to keep it for that. Now it's all the profit has been given back to the market, right? So this right now would be a good sell. Like I would say, like over here, this one over here, you see this? I would say this looks like a good sell. And then you're looking for this ultimately, this might come back, might go back up, but you're actually looking for it to come here. And then this levels here, you want it to correction. You don't want it to break this low and then fade back up. You want this to stay there and continue down to this level. So basically the SnP, what you want, my bias is I want the SnP to go down. Yes, this looks very good. This looks very good. So there's the downside potential here, right? Again, this downside potential is not, what is it not? This downside potential is not here, and then I'm not saying that it will go collapse. All right, we are not talking about here like this. We are talking about what? We're talking about in time factored swings, you're talking about here to here, get out. Because if you entered somewhere here, because you're not about picking the bottom, you're about picking somewhere where it's about to go, right? So if you pick somewhere here and you made this amount of money and you don't exit here, what's going to happen? You give it all back, right? If you took this breakout, but you took the breakout, you went up there and you don't exit, you give it all back. You see, you give it all back. You a big push up, you don't exit, what happened? You get a lot of it back. So you enter here, there are a lot of plenty of chances to give it all back. So when basically when you're not looking for this, you're looking for here to maybe like here, take it and go. Because why? You don't want to give it all back. Basically a long push down and you enter for the sell, is that correct? No. Why? Because you don't want, it's going to pull back. Then you're gonna give it all back, basically. Right? So you don't want to, after a strong push, never try to enter anymore. Because the money has already been made. Right? All those news, Wall Street Journal will all start announcing, oh, this happened, and it's all exciting. But by the time you read the news and then you enter a sell, guess what? It's too late. Wall Street Journal, they report stuff that's already happened. So it's pretty much useless, right? So at this point in time, naturally at the high, it's too, you don't really want to take the buy. It's a bit too high right here. I would not then take the buy anymore, right? So if I was to sell, I would sell the certain zones and then exit, right? So again, I would like to sell to certain zones. I think there'll be a retrace coming. If this says you want to go down some more, then I'll sell it again. But I'm not going to sell here and just keep it all the way down there, right? No, you're going to intraday trade the whole entire piece, basically. Because this piece could always come here, chuck here, stuck there. Suddenly you just, then, oh, down, break the top. And then suddenly you're thinking, hey, what happened to my impulse, correction impulse? I'm telling you now, right? It's it's premature to just say that will happen, right? I'm not an advocate of this, or this will surely make money. No, you got to see the context of it and the risk reward, when to enter, when to get out. A trade is just a trade. You know, there's no, you don't worry about it being right or wrong. Just worry about what you can take. Just take what we can from the market. So at this point in time, what I am interested in is this places like this. You see, this are all connected. Now this one, the most optimistic move is for this one to come all the way to the, I'm very optimistic about that possible, right? So that would be the best case scenario. How intraday trade this down would be a necessary skill as well. So the bias for me at this point in time would be some move to the downside, right? And if you're wrong, anywhere up here, you gotta know how to exit the trade already. Okay, and don't forget the lot size. So that's it. I guess I'm gonna end off right here and trade safe. Take care. Bye-bye.